Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Welcome to Financial Issues. Thanks for tuning in today. I'm your host, Shana. We're going to be here for the whole hour. So if you've got questions today, get your call queued up. Our number 610-363-1110, and you'll be the first caller in the queue today. We've got a lot to talk about, and we hope to get some questions from you guys. 610-363-1110.
Also, it's Shana's birthday, so you need to call in to wish her a happy birthday.
Thanks, Sam. I appreciate that. It's something ending with a 9, but I won't say what.
You'll be coy about it. You'll keep us guessing.
Yeah, that's right.
29?
Yeah. Mm-hmm. Plus
19.
some. Plus some. Well, if you have questions today, go ahead and call in. 610-363-1110 is the phone number. And if you're maybe tuning in for the first time and wondering what you could call and ask us about, well, our favorite thing to talk about is stewardship. FISM, the S in FISM stands for Stewardship, Financial Issues Stewardship Ministries. So our goal is to defund darkness by giving you a biblically responsible investing strategy that you can implement. You can become your own portfolio manager and screen out the corporations that are funding the darkness of this world, like abortion, pornography, the LGBTQ agenda, and so many other things that grieve the heart of the Lord. We don't want the money that God trusted us to manage to be funding those dark activities. We also encourage you to fund the light. That is the second part of our stewardship mandate, to be joyful, generous, and obedient givers. And we have plenty of opportunities for you to do that. We'll talk about one of those today. We are in the midst of our Preborn Mother's Day campaign. We know Mother's Day has already passed, but mothers are so great. We should have a Mother's Month. I mean, after all, Pride got a whole month, so, but not this year. So 610-363-1110 is the phone number to call on today's show. We're going to talk about the latest news and analysis, including the U.S. debt downgrade by Moody's and China's latest tariff tantrum, or trade tantrum, we'll call it. We'll also get timeless wisdom from the scriptures. Today we'll be in Psalm 119 and 73. Well, this past Friday on May 16, 2025, Moody's Ratings downgraded the U.S. government's credit rating from AAA to AA1, citing escalating federal debt and persistent fiscal deficits. Well, this move is reflecting a growing apprehension over the nation's fiscal trajectory and the government's ability to manage its obligation, or, as we like to say, inability to even manage their lunch money. Thanks for getting your head in the game, Captain Obvious. This downgrade comes more than decades late and a couple of $1 trillion short. Moody now aligns with previous debt downgrades by other major credit rating agencies. Standard & Poor's lowered the U.S. credit rating from AAA to AA+ in August of 2011, primarily due to political brinkmanship over the debt ceiling. More recently, in August of 2023, Fitch Ratings also downgraded the U.S. from AAA to AA+, citing expected fiscal deterioration and a growing government debt burden. The debt, by the way, is not on the shoulders of the government. It's on the shoulders of the U.S. taxpayer. Moody's, however, didn't downgrade in 2011 when S&P did, when we saw our first $1 trillion budget deficit under President Obama, nor in 2023 when Biden took our fiscal deficit, annual deficit, to $2 trillion plus. Well, I guess it's because they see tax cuts as the big threat, not the out-of-control spending. Guess what, Moody's? There are two parts that contribute to deficits: revenues and expenses. And the markets crashed on this unexpected revelation. No, it didn't. The Dow was up 0.32% yesterday. The S&P was around the flat line at 0.09, and the NASDAQ was also around the flat line at 0.02%. White House economic advisor Kevin Hassett and Treasury Secretary Scott Bessent on Monday shrugged off Moody's ratings downgrade of the U.S. credit worthiness. Kevin Hassett said, "Make no mistake, the U.S. debt is still the safest bet on earth." He also reiterated what Scott Bessent said, that the rating is a backward-looking thing, penalizing us for all the reckless spending of the Biden administration. But we're cutting spending, we're deregulating, and we've got supply-side growth. So the Trump administration is not the only ones who are shrugging off these downgrades. Some investors remain confident in the U.S. government securities. Some, like Warren Buffett's Berkshire Hathaway, which has become the fourth largest holder of U.S. Treasury bills. By the end of March of this year, Berkshire held approximately $314 billion in short-term government bills. That is, bills that come due between 1 month and 1 year. This accounts for about 5% of the entire Treasury bill market. Warren Buffett's not worried about the full faith and credit of the USA, since he has reportedly purchased and continues to purchase up to $10 billion a week in Treasury auctions to make his own money market fund, which is bigger than some of Fidelity's or Vanguard's U.S. Treasury money market funds. So, interesting things there. We've got some things to talk about. I want to pivot to China and their hypocrisy, their latest bout of hypocrisy, but we're going to have to wait until after the break. I don't think I have enough time quite to get to that. So why don't we take one of the questions that have come in?
Yes, happy to do that, Shana. Let's take a look here. We'll start with Steve, who said, "Should I be concerned that I'm being required to sign a designated investments agreement for at least one of the preferreds and the commodity investments?" He's 58 years old.
I wouldn't have a high level. I wouldn't be alarmed over it. I mean, I would just read through it. I don't know what it says. I don't know what they're asking you to sign on to, but a lot of times they will ask you to acknowledge that you understand how things work when you're not getting just the traditional run-of-the-mill common stock. So in a preferred stock, or maybe it's an MLP that has a different kind of tax reporting consequence, they want you just to sign a statement. They're just trying to cover their assets and make sure that you understand what you're investing in. Commodities also tend to carry a little bit higher risk with them, so they just want you to know what you're getting into there.
All right, very good. I'm going to jump down to Karen, who says, "Are the commodities considered aggressive like technology and healthcare? Where would it be best to own them? I have cash to buy them in a traditional IRA, a Roth IRA, or a regular investment account. Thank you for all you do."
All right, Karen. So commodities would be considered, are the ones that we have on our list anyway. We don't have a wide range of commodities. We're not, encouraging that you trade oil and food and different things like that. The only commodities that we have on our list are some metals. So as far as our strategy goes, these commodities would really be considered more growth, not necessarily super aggressive. If you're a partner and you look at the underlying commodities for that sector that we have, you're going to understand that it's nothing outrageous or crazy. So I would not consider it to be aggressive. I would consider it to be a growth type of investment. So that sort of eliminates the IRA as the best place to hold it, because, in your IRA, what you have to keep in mind is that whenever you grow money in your IRA, you're not only growing it for yourself, but you're growing it for the government, because all of the growth that you have inside of your IRA will eventually be taxed. Now, you won't get a 1099, you won't pay capital gains or if you earned any dividends, which you don't on that kind of holding, but if you had any growth in it, you won't get a 1099 immediately, but whenever you start to draw money out of that type of account, that's when you will be taxed on the whole thing. So I like either the Roth. I would consider technology and healthcare to be more aggressive than the commodities that we have on our list. So if you have limited room available in your Roth IRA, I would reserve that room for the healthcare and technology pieces of your portfolio, and that by process of elimination gives us the taxable account, which is a great place to own ETFs, by the way, because they are more tax efficient. Well, stick with us. We're going to take a short break, and then we'll be back with more financial issues.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Kids need the hope of Jesus. There's so much loneliness, brokenness, isolation, and bullying. Now, you and I, we have the opportunity to do exactly what Jesus said, to go and make disciples, right where they are, right inside their public school. The Lord has been building the impact of Crossroads Kids Club, and we ask for your help to pursue a vision of greater national expansion.
To join us, visit reachourschools.com. That's reachourschools.com.
Every day, thousands of women are faced with the decision of whether to have an abortion. But one ultrasound can change everything. For just $28, you can provide an ultrasound, giving a mother the chance to choose life. To make your gift go even further, a generous donor will match every dollar you give, doubling your impact. Just go to preborn.com/FISM to give now. Again, that's preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. I'm your host, Shana Burt. Thanks for sticking with us today. Well, let's take a look at China's latest hypocrisy on display in the Huawei chip blowback. So China is throwing a fit again. This time they're lashing out over U.S. guidance that warns global companies against using Huawei advanced AI chips, specifically the Ascend series. So the U.S. Department of Commerce raised concerns that these chips may contain a certain technology that could violate the American export controls. Now, Beijing is crying foul, accusing the U.S. of wrongdoing, discrimination, and undermining recent trade progress. They're demanding that America immediately correct its mistakes, all while threatening countermeasures of their own. But let's be honest here, China's outrage is not only misplaced, it's laughably hypocritical. This is the same Chinese regime that for decades has built its technology empire not through innovation, but through imitation. stealing intellectual property, forcing technology transfers from Western companies, and embedding back doors in their telecom equipment. Huawei itself is a poster child for this pattern of behavior, which is why it's been at the center of U.S. national security concerns for years. And now, after reaping the benefits of espionage, coercion, and IP theft, China wants to play the victim when the U.S. enforces its very export rules designed to protect its own technological edge. That's not just disingenuous, it's dangerous. Let's be clear, the U.S. isn't targeting Huawei for no reason. We're protecting national security, something that the leaders of this country have not taken seriously for a long time. We're preserving technological leadership, and we're sending a message that you can't build an empire on stolen blueprints and then cry unfair when someone calls you out on it. If China wants to be treated like a responsible global player, it should act like one. That starts with respecting intellectual property, playing by international rules, and ceasing the kind of cyber and economic warfare that got us here in the first place. To go a little deeper, this tantrum is just a smokescreen. While China throws a public tantrum over Huawei, behind the scenes, they're shutting off access to their country's economic data. Land sales, unemployment, retail figures, even cremation numbers. Why? Because the real numbers aren't good. Economists estimate that the actual growth in China in 2024 was closer to 2%, not the 5% that they reported. One economist in China was even fired just for saying that out loud. This is more than just bad PR, it's deception. And what does the scripture tell us about that? Proverbs 11:1 reminds us that a false balance is an abomination to the Lord, but a just weight is his delight. China is tipping the scales and expecting the world not to notice. The Huawei backlash isn't about national pride, it's about losing control. China built its tech empire by stealing intellectual property and gaming the global system. And now that the U.S. is enforcing its rules, Beijing is panicking. But God sees it all, even what authoritarian governments try to sweep under the red carpet. Luke 12:2 also says, "Nothing is covered up that will not be revealed, or hidden that will not be known." So while China tries to silence the truth, we must be a people who walk in it, defending what is right, standing for transparency, and calling deception what it is. Until China wants to play by the rules that it ignores and then tries to use only when it's convenient for them, we shouldn't be apologizing. We should be doubling down. And that's all I have to say about that. All right, let's shift gears and get to something more positive. How about our stewardship verse of the day? It comes from Psalm 119:73. Your hands have made me and fashioned me. The psalmist in this scripture is acknowledging that God is the creator who personally formed him. Because of that, he appeals to God for understanding, specifically so that he can learn to obey God's commands. It's a humble recognition that both our life and our ability to grasp spiritual truth come only and exclusively from the Lord. The writer of this psalm was someone deeply committed to God's word, someone who sought to live a life wholly shaped by that word. May we too desire to fully know that we have been personally created and shaped by the very hand of God himself. And may we understand that we are fully known by our Creator. And that should cause us to seek wholeheartedly to know him and follow him in all of his ways. May we also seek to use some of the financial resources that we've been given to help others come to that profound truth too. We can do that. We can give you a very practical way to do that, to deploy some of the financial resources that God has trusted you to manage to help others hear that gospel truth. You can do that by donating to Preborn Ministries. We are helping them in their Mother's Day campaign for the whole month of May. So our goal has been to raise $280,000 for preborn. If we can do that, we are paying for ultrasounds, and these ultrasounds will be, we have a generous donor who's going to match that. For every $5,600 in, or is it 56 or 58? $56 or $5,800 that we raise in donations, one ultrasound machine is going to be paid for by a generous donor. So you're leveraging your gift here. You're paying for the ultrasounds. Someone else is then going to come along and buy the ultrasound machine. And on top of that, this is God's math, folks, that generous donor is going to make a match to financial issues. So if we raise $280,000, $280,000 pays for all of those ultrasounds. 50 ultrasound machines are purchased, and Financial Issues gets a gift of $280,000. So we are more than halfway through. We're about probably 2/3 way through our campaign here, because we're running through the end of the month on May 31st, and we're about 1/3 of the way to our goal. So far, you guys have generously given over $95,000. We've got a little ways to go. So if you haven't given yet, take it to the Lord in prayer and see if this is a place that He would have you deploy some of your financial resources. So if you're giving in a creative way, maybe if you're going to give via appreciated stock, or you're going to send a qualified charitable distribution if you're 70.5 and you're sending money from your IRA account, make sure that you put a note on there and let them know that it is because of the efforts of Financial Issues that they are giving to Preborn, so that we can qualify for the match. And you can send a little note to Pat if you'd like as well, and we'll make sure that that gets done. We've got the QR code up there on the screen. If you're watching, you can just point your phone at that little QR code. It'll take you directly to the place where you can give securely. You can also find the information if you go to our website, financialissues.org, and you can call, what is it, pound 250?
Pound 250, keyword baby.
Baby. And I'm sure they're going to ask you, or I think that's linked to, is that linked to our ministry? Or they'll know.
I believe you have to say something about FISM. So if you're calling and you're calling that pound 250 and say keyword baby, you say you make the donation, but you also want to do it through FISM.
Great. Thanks, Sam. Good information. All right. I think we've got time to get to one call here before the end of the segment. Let's go to Randy. Randy's calling from Florida. Hi, Randy. You're live.
Hi, Shannon. Thanks for the call, by the way, taking my call. I am looking at this BRIC nation meeting they're having in July in regards to our currency, and I'm sure you're aware of it. And as far as they are, I guess, attempting to change the international currency to a gold standard, maybe. Anyway, I was just hoping I could get your thoughts on that. If this is something we should be paying any attention to or not, and I'll just let you answer that. I'm just concerned. Since I don't really own any gold other than what we have, in our portfolio.
Yeah. Okay. Great question. Thanks, Randy. Well, I would say that if we had a different leader of our country, I would be a lot more concerned about what's going on with BRICS. But, Trump's already spoken out on this, and he sort of, warned countries that are trying to usurp the U.S. Dollar as the world's currency for trade on this. So, they're going to meet. I mean, it's what they do. There are forces of evil in the world. There's good and evil forces at work all the time. So, what I think is going to happen in the end times, and Jesus said the end times started when he went back to heaven. So we don't know the exact timing of this, but at one point there will be a one world government, which means that there will be a one world currency, because an antichrist has to be able to control it, through the mark of the beast, and be able to cut off buying and selling. So, I think this is just steps toward that. I'm not super worried about what's going to happen in July. There has been an underlying trend, and it's one of the reasons that we've now started including a small percentage of commodities in our investment portfolios just to diversify. But central banks have been accumulating gold for over a decade now, and that has just really stepped up. So I don't know, are we going to an international gold standard? Well, it would help to eliminate some of the crazy out of control spending and printing of money, but I don't think it's anything to be super worried about. In fact, the scripture tells us not to be super worried about anything. All right, folks, if you're listening on an outlet that only carries the short version of the show, we bid you a farewell. If you want to catch the full show, financialissues.org/live. Everyone else, stick around. We'll be back with more Financial Issues.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
Every day, thousands of women are faced with the decision of whether to have an abortion. But one ultrasound can change everything. Preborn is stepping in to help. In crisis pregnancy centers across the nation, they offer women the opportunity to see their baby, hear the heartbeat, and learn about the gospel. For just $28, you can provide an ultrasound, giving a mother the chance to choose life. And there's more. When we reach 200 ultrasounds, Preborn will place a new ultrasound machine in a clinic, creating a lasting impact for years to come. To make your gift go even further, a generous donor will match every dollar you give, doubling your impact. Give today, save lives, share hope. Don't wait. You can make motherhood possible. Just go to preborn.com/FISM to give now. Again, that's preborn.com/FISM.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I learned how to pray to God. It helps me through my day. I will commit myself to learn more about God's Word, to be able to share the gospel to others. Jesus has been a big impact in our family. Now we go to church every Sunday. I see more happiness and less arguments. God's love is so perfect, I will not change God for anything.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
Welcome back to Financial Issues. Thanks for sticking with us. I'm your host, Shana Bird, and we've got a caller in the call queue. If you want to get your call queued up, you will be the next person right after Bill at 610-363-1110 is the phone number. Well, let's jump right to Bill. Bill's calling from Mississippi. Hi, Bill. You're live.
Hey, Shana. Good morning. How you doing?
Good. How are you?
I'm good. Hey, my question, I'm retiring next month. I'll be 72 in October, and I'm working the income asset allocation model. And I'm just a little curious about how things are going to change with as far as the mutual funds that I have within my portfolio. Do I want to still take, reinvest the dividends and the capital gains? Do I want to start taking that as income? Just kind of pick your brain a little bit about how this would change. It's all within a Roth IRA. Everything I've got is within a Roth. But how do I work that as I start to redeem some of those shares to move them over to income that I can use, for maybe monthly, that kind of thing.
Yeah, okay. So 2 of the mutual funds that you likely have are considered fixed income funds. One's has about a 4% yield. The other one has around a 6% yield. Those, I would just have the dividends pay into your money market. Now, the other mutual funds that you may include in your portfolio, maybe an international, the Israel, or some of the growth ones, I would still have those reinvested. So you typically can either code your account, like at the account level, to do certain things with dividends and capital gains and interest, or you can do it on a security by security basis. It's like I know on the platform that I use, I just kind of right click on it and then you can change your instructions there.
Okay. One other kind of follow up on that. I've got MF59 and MF83 that I'm kind of overweighted in both of those. And I tried to exchange that with Schwab, exchange some of those shares within Timothy, and they basically told me that I wasn't able to do that. So like I said, I'm overweighted on those 2. Is that something that I need to try to balance out, or should I just kind of stick with it?
What share class do you have? Do you have the A or the I?
They're A shares, I'm pretty sure.
And did you call them and they said you can't exchange?
Yeah, used to be on the previous platforms I could do the exchange myself, but Schwab doesn't have that as an option. You have to talk to somebody, and I did. I tried really hard to exchange some Timothy Plan shares within Schwab, and they basically came back and told me that the only way I could do that would be to take a different class of share if I was to do it, and it just didn't sound like the way it had worked in the past, so I kind of gave up on that.
Did you just talk to one person?
Well, I talked to 2 different people on 2 different days, and they said they were going to get back to me, and they never did. So I finally, I finally messaged them and said, "Hey, what's going on?" And I got an answer, and that's what the answer was that they basically said that I wasn't able to do it. So the only option would be to sell and to redeem as opposed to exchanging, at least through Schwab.
Yeah, I would call them again. I would try to get another person on the phone. Sometimes when you get an answer, because that answer doesn't quite sound right to me, I'm not familiar with Schwab's platform and I don't know all of their rules, but it sounds to me like you've kind of stumped them. So
yeah, that's what I thought too.
I would try again. And maybe, if you get an answer that doesn't quite sound right, just politely ask if you could maybe speak to a supervisor or, that's the thing with today's generation. I don't know how old those people were, but it's like today's generation. Like when I go to a restaurant, a lot of times you'll ask them just a really simple question like, do you have sweet and low? And they'll be like, I don't know. And just stand there and look at you not like, well, let me find out. There's nothing wrong with not knowing, it's just, right. What are you going to do about it at this point? So it baffles me that, the service industry these days, they just don't care too much about service. I guess that's because tipping has almost become mandatory in some cases, but anyway, yeah. I digress.
Well, yeah, well, I'll give that a try. 'Cause, I've done this in the past. I've done it. But with Schwab, I'm kind of running into some headwinds. So I'll just keep working that. And I appreciate you taking my call. And happy birthday, by the way.
Absolutely. Thank you. Thanks, Lynn.
Right.
Or Bill, I'm sorry.
Okay. Bye-bye.
Lynn's the next person. I don't know. Do we have time to get to Lynn right now, or do we need to?
I don't know. That's up to you, Shannon. What do you want to do? It's your birthday. You can do what you want.
Yeah, let's hold Lynn until after the break. I want to give her plenty of time. So what do we have there on the questions that have come in?
Well, we have a comment from Bert, and I'm sad to say, Shana, he is surprised and appalled that you would be for the taxpayer to jumpstart a savings account for every child as proposed in Ted Cruz's bill. He says the structure would be great, but it should be the parents or grandparents to jumpstart this account. He goes on to say, as for starting a generation of self-reliant investors, well, the seed will be planted in them that the government's going to take care of them. That's because they're putting in that $1,000, not their parents or grandparents. He ends by saying, though, that he still loves you and financial issues. So that's good.
Well, good. No, Bert, what I do like most is the tax-free structure and the freedom that this bill is going to offer for the way that children can invest and the way that they can take their money out. As far as the $1,000 of seed money, I tend to agree with you. I'm for the government cutting spending on everything, not really just shifting money around. So, it is the part that is the tax-free part and the freedom part of this bill that I really like.
Works for me, Shana. That's a good answer for me. Meanwhile, Thomas says, howdy. I'm planning on retirement from the VA in late 2025, this December. He says, I have my TSP and I want to move this money into an IRA and then set it up into a BRI investment strategy, hoping not to touch any money from it until I hit 70 or so, longer if possible, currently at $378,000. Can you assist on how to set up the IRA or investment account in Fidelity?
Yeah, so it's really an easy thing to do. If you're choosing Fidelity, we don't have a recommendation about which platform to use. Fidelity has one, Vanguard Brokerage has one, Interactive Brokers has one. There's several different ones out there. I would just kind of shop around, see which one you like, see which one it gives you the ability to do what you want to do, make sure that it's going to allow you to buy everything that's in your asset allocation model. And then you just, you go online. Most of these platforms just have a really simple way of opening an account. So they're going to ask you for personal information. They're probably going to ask you for some identification, driver's license or something like that. You just follow the prompts online. When you go in, it asks what kind of account you want to set up. If you're rolling over pre-tax money from a TSP plan, you're going to want to make sure to set up a traditional IRA. And then once the account is established, you go to your TSP plan, you get the paperwork to do the rollover, and that money is then sent to your new account, and you're ready to go and start building your portfolio. All right, we got to take a break. Don't go anywhere. We're going to hear from Craig Haugaard with the Ag Report. After we get to Craig, we're going to take a break, and then we'll come back and we'll have more financial issues.
This is Craig Haugaard with your Financial Issues Ag Update for May 20th. Well, corn had another strong week of planting with 78% of the crop planted thus far. That's up 16% for the week. Now, in spite of the fast planting pace and good weather, the market rallied as traders were surprised by a CFTC report that showed the funds were a lot shorter corn than had been previously estimated. As a result, we saw some short covering. July corn was 4 cents higher at $4.47.5. Soybean production in the U.S. is on a good path towards trend to above trendline yields. The planting pace at 66% planted is well above the 5-year average. And on the export front, we continue to struggle as Brazil is at least 50 cents per bushel cheaper FOB for spot soybeans. At the closing bell, we had July beans 0.75 cents higher at $10.50 per bushel. Wheat was a weather story. Russia declared a state of emergency for the Rostov region due to frost. China's wheat region is struggling with extreme heat and drought, while here in the U.S., portions of northern U.S. spring wheat country is dry, while portions of winter wheat country have excess moisture. At the closing bell, Minneapolis July wheat was 12 1/4 cents higher at $5.85 1/2. Kansas City rose by 6 1/4 cents, closing at $5.22 3/4, and Chicago was 4 cents better at $5.29 per bushel. Cotton futures seem to have reached kind of a level of support. Still pretty choppy, but nothing too dramatic either way. July futures were 75 points higher at the closing bell as they settled at 65.64. Livestock futures were mixed. We had August live cattle $1.17 1/2 higher at $207.92 1/2 per hundredweight. August feeder cattle were 12 1/2 cents lower as they closed out the session at $297.47 1/2 per hundred. And July lean hog futures were 60 cents lower at $103.57 1/2 per hundredweight. Class C milk futures had a rough session. When the closing bell finally sounded, June was down 21 points at 19.02. Well, this has been Craig Haugaard with your Financial Issues Egg Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Each May, we celebrate Mother's Day and the gift that mothers are to us. This May, you can help make motherhood possible by supporting Preborn. Preborn partners with clinics across the country, providing free ultrasounds and sharing the hope of Jesus Christ with women who are abortion-minded. When you give to Preborn, you're giving these women a chance to choose life. Go to preborn.com/FISM to give today. That's preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. We're at the home stretch of the program today. We do have one caller in the queue, and if you get your call queued up right now, we'll have time for you too. 610-363-1110 is the phone number to call. So let's get right to Lynn. Lynn's calling from Oregon. Hi, Lynn. You're live.
Good morning. I have a question about money that's in a 403B. I had talked to you once before and mentioned perhaps taking that money, paying tax on it, and putting it into an account that the earnings will not be taxed. Can you give advice on how to do that? Is that still called a Roth if you're doing that? How much can you do a year? How much do you suggest you do a year?
Okay. So if it's in a 403B, you'll need to contact your 403 provider and just ask them what options you have for moving the money out. Sometimes they'll let you do it directly to a Roth, and that'll be called a conversion. Sometimes they won't. If it's taxable, pre-tax money, they'll want you to roll it over first. So that's sort of my preference, is to get the money out of the 403B, roll it into an IRA, because I wouldn't suspect expect that you would be moving all of it at one time into a Roth. So that establishes that IRA account with a custodian that you're probably going to set up either your Roth or your taxable brokerage account with. That way, all of your tax documents can kind of come from one place. It's not a requirement, but it just seems a little bit more user friendly to do it that way. So once you roll over the money into an IRA, then you can start to be strategic about the amounts that you convert to a Roth. So you'll need to open a Roth IRA at that point. You'll want to consider your income. So, and I don't know, you don't have to tell me how old you are, but just how close to age 65 are you?
I am 70, and I have,
okay.
And I already have a Roth at a brokerage account.
Okay. So you can do a conversion to that one since it sounds like you've met the qualifying options. If has your Roth been open for 5 years already?
Yes.
Okay, so it sounds like you're pretty good on that 5-year rule, so you can use your existing Roth and do conversions to that. So then what I would do is, because you're over 65, if you're on Medicare, which I'm sure that you are, you have a consideration of trying to avoid the IRMA penalty. And so once your income is over a certain level, and that level is typically right over the top of the 24% tax bracket. So once you go from 22 to 24, whether you're single or married filing jointly, there's an income level there that you want to try to stay under, because it can affect your Medicare's Part B and D premiums. And it won't happen right away. Like they'll use your 2025 income to determine your premiums in 2027. So there's a little bit of a lag there. So you want to try to stay well under, maybe only to the top of the 22% tax bracket. So then what you're going to have to do is a good place to start is to look at your last year's tax return. That'll kind of give you a clue of what your taxable sources of income would be. And then, and what your deductions are, whether you use a standard deduction or whether you itemize, but you'll have to try to predict your 2025 income. So then once you get that number, subtract out your deductions, and then figure out how far you are from the top of the 22% bracket, and that'll give you a good estimate of how much to do. The other thing that you want to consider is that once you're 70 and a half, you can start doing what's called a qualified charitable distribution, where you can start doing your giving to nonprofit organizations directly from your IRA. And so the whole idea, the reason that somebody would want to do a Roth conversion and go ahead and pay the taxes anyway, is because you're trying to win the tax game. You're trying to get the money out of that qualified account or out of that pre-tax account at the most efficient tax rate. So 12% is a good rate. It's almost a no-brainer for me to consider, moving out to get to the top of the 12%. Doing some in the 22% is still, a pretty good consideration. What you have to weigh it out is, are you going to ever have the opportunity to get the money out at a lower rate? So, if let's say that you want to do the rest of your lifetime giving from your IRA account, well, you certainly wouldn't want to take the money out and pay 22% or 12% or any percentage tax on that money. If it's, if you're whittling down that IRA to just what you think you'll give during your lifetime, or maybe if you have charitable beneficiaries, if you have kingdom beneficiaries, that's one of my favorite questions to ask my clients when we get to the estate planning piece is, tell me about your beneficiaries. Are they all people, or do you have any kingdom beneficiaries? Is there any giving that you're doing now that you want to continue doing when you go home to be with the Lord? So look at the balance in that IRA, because any amount that you plan on giving for the rest of your life or at death can be taxed at 0%, and 0 is way better than 12 or 22.
Okay, I do have a QCD that I just recently set up. Is the money that I would roll over into a Roth at my brokerage account from the 403B, does that have the 5-year limit on before you can begin to use it? So
because you're Roth has been established for 5 years and you're 59 and a half, I think you're pretty safe. Now, you'll want to double check all of your personal situation with, your tax professional, but probably not. And even still, if you've had that Roth for a long time, your income you're probably going to want to get your income from other sources. So if you're already looking at moving money out of your IRA and paying the taxes on it, the Roth is probably going to be the place of last resort that you want to get money from. And you always, even when you're under 59 and a half, there's certain amounts of your Roth that you can take out without tax or penalty, kind of regardless, like the amounts that you've contributed, the amounts that are past the 5-year rule, so on and so forth. So sounds to me like you're probably fine, but you'll just want to double check your own situation.
Okay. All right. Thank you so much for telling
Absolutely.
me that. Thank you.
Great questions, Lynn. I know she probably helps some people, maybe some people that are too shy to call, or maybe people that have just never even thought of doing things that way. But, this is one of the strategies that I think you'll find is probably not exclusive to financial issues, but it's probably not a commonly common thing that most financial advisors will recommend, or tax advisors for that matter, because tax people tend to be really focused on the past, right? They're trying to calculate the taxes that you owe for the previous year and maybe help you pay as little taxes as you can. But we encourage you to be forward-looking. We've got the U.S. with this approaching $37 trillion in debt. Taxes are up for discussion. Spending is up for discussion. There's all of these things. But at this point in time, we're still running a deficit. And so, I have to believe until we get some real progress in those areas, taxes are going to be either the same as what they are now or maybe even higher in the future. If we had a different outcome from this last election, I think a lot of people would have been wishing that they would have gotten money out sooner and paid it even at the 22% rate, because I think taxes would definitely get worse. And, we don't know what's going to happen in the next election. Hopefully, the American people will be convinced that the way that things are being done right now is the way that is going to be best for all Americans, and they'll want to continue that. But we just never know. So it's best to manage, that's why diversification matters. And it's not just diversification among the different types of asset classes, but it's diversification between different types of accounts. So, you have the pre-tax accounts, which are the traditional IRAs where you're going to pay taxes at some point in the future. You've got the Roth where you get the tax-free growth. That's very, very beneficial, especially if taxes are higher in the future than what they are today. And then you have just the plain old taxable accounts where, you don't have to pay taxes on the principal again. You just, if you get capital gains or interest that you earn, then you pay taxes along the way as you go. So having good diversification even among your types of account, I think is prudent as well. Well, time flies when you're having fun, right?
Well, it's your birthday. You should be having fun.
That's right. Well, I'll wait till the weekend. It's just another day at work for me. So, all right, folks. Well, we hope that you're going to come back again and again, because at Financial Issues, we believe that God owns everything. He is the creator of everything, and He's the owner of everything. And that should give us an attitude of gratitude for what the Lord trusts us to manage. We consider that a privilege that God lets us have anything. And so the things that He does have, we want to be faithful with those things, because time's getting short. The Master is coming back, and we're going to be held accountable one day for the way that we manage the time, talent, and financial resources that we've been given. Financial Issues, we want to be here to help you be found a good and faithful steward. Find out more about our ministry at financialissues.org, and while you're there, consider funding the light by giving to Preborn Ministries' Mother's Day campaign. Well, we hope that you'll come back tomorrow, because Lord willing, we'll be here with more Financial Issues. I'm your host, Shana Burke, signing off.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.